Distinguished ladies and gentlemen, and our audience tuned in to Joy 99.7 FM. Good morning, and thank you very much for staying with us. It's a Wednesday morning, and we're coming to you live from the Allied Heights building in Accra on the Olusegun Obasanjo Highway. And it's the maiden edition of the Tesah Capital Investment Dialogue series. Now, some 3 years ago, or just shy of 3 years ago, we had a what some will call a rearrangement of the financial sector, but the actual terminology is the financial sector cleanup. And since that time, I'm sure, just as you and I have wondered whether we should carry on investing, whether you could trust the financial services sector with your money. It's a question that has burned on the minds of many people, including mine. Tesah Capital's Investment Dialogue series is put together to bring insights into very pertinent matters and topics in the financial sector around investing and ensuring that your money can work for you. This morning, we'll be hearing from two astute professionals. Mr. Paul Ababio is the Deputy Director General of the Securities and Exchange Commission, and Dr. Elikplim Agbloyor, who is a Senior Lecturer at the University of Ghana Business School. This conversation is brought to you by Tesah Capital in partnership with your superstation Joy 99.7 FM. And is live on our Facebook pages, and you can send us your thoughts and questions via the Facebook page and engage with us, and so that we can field those questions during the Q&A. Without further ado, I'd like to call on the Managing Director of Tesah Capital to bring us a word of welcome. Let's welcome Eugenia Bashir.
I'm glad to welcome you to Tesah Capital Limited's maiden investment dialogue. At Tesah Capital, we believe that the more knowledge people gain, the more empowered they become to take the right decisions on their investments. Therefore, this investment dialogue will be the first in a series of interactions we have dubbed the Tesah Capital Investment Dialogue, which we intend to hold to share knowledge, particularly on investments with our clients and the general public. We hope you always make time to join us. Tesah Capital is an investment management company licensed by the Securities and Exchange Commission and registered by the National Pensions Regulatory Authority. The board of Tesah is chaired by Mr. Eric Otu, and he's assisted on the board by Mr. Kwabena Boama, who is the regional director for Terminus, and Mr. Mensa Seniaja, who is the country manager for Lucozade Santori, and Dr. Justice Yankson, a lawyer, a medical doctor, and the General Secretary of the Ghana Medical Association. At Tesah, good corporate governance is one of our dealings, is core to our dealings, successes, and our future. Incorporated in 2010, we will be celebrating 11 years of delivering dedicated services to our clients in May this year. As we look to the years ahead, we envisage a partnership with our clients that will result in creating and growing generational wealth. We cannot, however, completely ignore the past. Our future is necessarily shaped by our experiences, and when our experiences, either bitter or sweet, make us better, then we have succeeded. We cannot therefore ignore the effects of the financial sector cleanup exercise that took place between 2018 and 2020. Though the exercise may have achieved its objectives, like any battle, there have been casualties and losses, and consequently, there is fear. Many people, understandably, are apprehensive about investing. It is a natural human response to what happened in our market. Have we, however, paused to consider the consequence of not investing. Not investing means losing great potential income. Not investing means missing the chance to probably acquire the house, that additional educational qualification, that secured retirement, or maybe the chance to leave a legacy of wealth for your descendants. Investing is the only proven way in which you can sit back and watch your money grow for you. Investing has not therefore lost its benefits. I want to urge and encourage you that although you may have fallen heavily off that horse, get right back on and start investing again. But this time, check the type of horse you choose, which stable it is from. Check the bridle, check the saddle, meaning know what you want, understand the opportunities and risks on the market, and get the right advice from the right sources. Whatever you do, do not stop investing. And if you have never invested, do not fear to start now. At Tesah, we understand your fears and your reluctance to invest. We have therefore thought of a way to gently initiate you into the habit of investing through the introduction of our flagship product, the Tesah Zero Balance Account. The Zero Balance Account allows you to join the Tesah family by opening an investment account with no initial deposit. The Zero Balance Account gives you access to our research information and our investment advisors. When you're ready to fund your account, our investment advisors will assist you to choose the right investment vehicles to grow your wealth. Tesah is particularly grateful to our speakers, the Deputy Director General of the Securities and Exchange Commission, Mr. Ababio, and Dr. Elikplim Agbloyor, a senior lecturer at the University of Ghana, for making time to join us this morning to throw light on this important subject. I'm optimistic that by the end of our first Tesah Capital Investment Dialogue, some, if not all your fears would have been allayed, and you will be ready to either start investing or get back into investing again.
We'll be taking an opening remark by a board member on behalf of the entire board in the person of Dr. Justice Yangson. Let's welcome him, please.
On behalf of the board and management of Tesah Capital, I welcome all of you to today's webinar. This is supposed to be the first of a series of dialogues that we're going to have, and we are committed to ensuring that there is enough financial knowledge out there for people to believe in our financial sector, especially the periods that have come right after the financial sector cleanup. We understand the anxieties that people may have gone through, but for us at Tesah, we can assure you that we want to walk the journey with you. We want to clear all doubts in your mind, and we're going to do this through these dialogue activities that we have instituted. We are going to be committed and regular. We are also going to do this through the expert management services that we are going to work on as you walk the journey with us. To all our clients, I can assure you that Tesah is on a sound footing. We have made sure that all structures are in place. By way of compliance, we are up to scratch with every little bit of the compliance activities that the regulator, the Securities and Exchange Commission requires of us. And we are going to continue to ensure that at all times we are compliant and we are up to date with every bit that the regulator requires of us. We are running a very open and transparent system where each client can at any given time log on and access his or her account details reach out to us either virtually or in person for any discussions relating to investments, relating to the management of your finances and the way forward. On behalf of the board of Tesah, I once again thank all of you for joining us. We really need a lot of time to have a very passionate discussion on the way forward as we walk through the journey post the financial sector cleanup. And we are very grateful to our experts here who understand the processes that we all have to go through. From academia and consultancy, we have Dr. Agbloyor here, and then we have the Deputy Director, the Deputy Director General, the Securities and Exchange Commission of Ghana, also here. So you can understand that from the regulator end, they are comfortable with us and they are working with us here. From academia and consultancy, they are also okay. We are very grateful for you being part of today's program. Thank you very much, and let's have a very good discussion for the rest of the day. Thank you.
We're going to go straight into our very first presentation, and it's brought to us by Dr. Elikplim Agbloyor. He's a senior lecturer in finance at the University of Ghana Business School, having received his PhD in finance. In fact, being the very first PhD graduate in finance from the University of Ghana. Currently an affiliate member of the Association of Chartered Certified Accountants, also written a Level 1 of Financial Risk Manager program administered by the Global Association of Risk Professionals. He teaches both at graduate and undergraduate level, and everything from corporate finance, corporate governance, entrepreneurial finance, private equity, you name it. He has what it takes to bring us his thoughts on investing in times of uncertainty. Let's welcome Elikplim Agbloyor.
So we've lived in turbulent times, especially in the financial sector. A lot of investors lost money. A number of companies were closed by regulators such as the Bank of Ghana and the SEC. And investors have lost money by investing in the financial markets. Indeed, when you invest, the expectation is to earn some returns. Okay, but investing also comes with risk. Some of these risks are manageable, others you cannot manage. I'd like to say that risk is everywhere dense. Okay, you can find risk everywhere you go. Even in our daily lives, risk is everywhere. But what we can do is to try to reduce risk and to manage what? Risk when we invest. Is that okay? Let me give you an analogy that I think will bring this clearer home. So when you sit in a car, okay, is there any guarantee that you get to your destination? There isn't. Is that okay? But there are safety measures that are put in cars to protect you, even in the event of an accident. Okay, so for example, you are asked to put on your seat belt. That is a risk mitigation measure. Okay, so when you are investing you need to look for ways to reduce risk or to mitigate what? Risk. Again, people don't understand that risk drives return. Okay, when I say risk drives return, what actually determines the returns you receive when you invest is the kind of risk that you take. Okay, so if you take impossible risk, then you are going to get impossible what? Returns. And those are returns that will likely not materialize. Is that okay? If you take too much risk when you're investing, if you're investing in vehicles that promise you 12% a month, 15% a month, that is outrageous. Nobody can really generate such returns for you with guarantee. Okay? And in situations or cases like that, you are likely to lose what? Your investments. Okay, so when you are investing, you shouldn't look for extreme returns, because if you do, then you are asking for extreme what? Risk. Okay, if you are looking for extreme returns, then you are also asking for extreme risk. And if you go in for extreme risk, you may lose all your money that you had invested. Okay, so basically that is about risk and returns. Now, because risk drives returns, when we are investing, the natural thing to do then is to try to minimize what? Risk. Or to try to mitigate what? Risk. Okay, so what are some of the measures you can use to mitigate risk? One is risk avoidance. Don't take any risk at all. But in this life, that is also something that you really cannot afford to do. Okay, there are people who say, oh, I won't take a plane. I don't want to fly. I'm scared of traveling. But you may be in your house, and this happened, I think, a few years ago at 37, and a plane can come and injure you. Okay, so avoiding risk is also not a very good option to take. Okay, so for example, if you are investing and you want to avoid risk, then you don't really put your money in risky vehicles, or you don't put your money in instruments that promise or give high returns. In such a case, you could, for example, put your money in a bank account where the risk is minimal or where the risk is what? Is low. Okay, so that is risk avoidance. The next strategy is what we call risk anticipation. And that is wise to do because we know that risk will occur, we know that risk will happen. So what you can do is to anticipate or plan for the risk so that when the risk materializes, it doesn't put you in an uncomfortable situation. Okay, so when you are investing, one of the risk mitigation strategies is to have what we call an emergency fund. Basically, this fund allows you to invest in instruments like treasury bills, okay? So low risk, equivalently the returns are also low, but your money is more or less guaranteed. Okay, you're not likely to lose this money. Okay, so one, you can have an emergency fund. Another risk mitigation measure is having life insurance. Okay, so, well, if you're a daredevil, maybe you don't want to insure, okay? But the essence of having life insurance is that, for example, if you pass on prematurely, then there's some money there for your dependents. Okay, so that's also a risk mitigation measure. And usually in a very good or optimal portfolio, you need some level of insurance in that portfolio. Okay, so one, is good to have an emergency fund. Two, is good to have what? Life insurance, okay? That helps to, in a way, put some shock absorbers into your investment strategy. Then next is what we call risk transfer. Okay, so if you can't absorb the risk, there may be parties who are better able to take on this risk. Okay, so again, one way to transfer risk is to use insurance. There are also more complicated vehicles, like what we call derivatives. Okay, so for example, if you are scared that the stock market will crash, you can buy a put insurance. That, in essence, gives you protection against a stock market crash. Okay, so another way to manage risk is to transfer risk to a third party who is better able to manage what? That risk. The final strategy I'll discuss is what we call risk reduction. Okay, and with risk reduction, what you do is that in investing, you're trying to diversify your portfolio, i.e., in layman language, don't put all your eggs into what? One basket, because if you do, what may happen? The basket may fall, break, and you may lose all your eggs. Okay, so don't put all your eggs in one basket. To bring it home when you're investing, it means that you should spread your investments across various asset classes. So you can buy treasury instruments, you can buy treasury bills. Okay, treasury bills are still treasury instruments. You can buy equity instruments. And there are other categories of investments that you could buy, like private equity, hedge funds, etc. A number of these are not yet available in Ghana. But try to diversify across instruments, so buy treasury instruments, buy equity instruments. Try to diversify across sectors. Again, I like to tell people that I don't like to time the market. I wish I had perfect foresight that I can tell that, oh, today maybe this sector will do well or that company will do well. But the honest truth is that we don't. Okay, and in the absence of perfect foresight, it makes sense to diversify. If you don't know which sector will be the star sector, let's say this year or next year, then maybe spread all your eggs across the different sectors. That's a sensible strategy to undertake. Or you are not sure of interest rate directions. Okay, some people want to bet on the interest rate. If interest rates are increasing, you want to do short-term instruments. If interest rates are reducing, you want to do long-term instruments to lock in the interest rates. But again, we don't have perfect foresight. We don't know what the interest rate will be tomorrow or in 6 months' time. Okay? And therefore, in a scenario like this, it makes sense to, again, diversify. So put part of your money in the short-term end of the market, and also put part of your money in the long-term end of the market. Okay, so these are some of the risk mitigation strategies. Now, what should investors do after the financial sector cleanup? Okay, so I've already alluded to one, don't chase returns. Okay, because if you are chasing returns, you are chasing risk. Because risk drives what? Returns. Okay, so don't chase abnormal returns. What returns will we classify as abnormal? For example, 10% a month, I think guaranteed is abnormal. 12% a month guaranteed, I think is abnormal. Okay, currently, if you buy treasury instruments, they are going between 12%, 13%. Okay, for debt instruments, that's understandable. Okay, that is not like 120% a year. Or if you are doing the equity market, I would say that the average return probably you could get is about 20% a year. So between 12, 20% are normal returns. These are returns that also compensate you for what? Inflation. Beyond that, I think you should be careful. Of course, the equity markets in some years can do 50%. Okay, that's the beauty of equity. Okay, but if somebody is guaranteeing you 50% a year, 100% a year, you should flee for your life. Okay, again, when you are going to invest, ask relevant questions. What are you going to invest my money in? How does the manager manage risk? Okay, how can I get access to information about my investments? These are important questions to ask. Again, check if the institution is licensed. I'm sure Paul will speak more about this. Check if the institution is licensed by the SEC. Again, check if the institution has issues with the regulator. So I went to the website of SEC and I realized that they had categorized companies into let me say, buckets or color schemes. So they're gold. If you have a gold color, it means they don't have any issue with you. If you have a red color, it means they have issues with the company. Okay, so if the company you want to invest in has a red sign or red color, it means you should be careful in investing with these companies. Again, check the qualifications of the management of the investment company and also their board. Okay, that sends a signal. If the board has highly qualified people, and these people usually want to protect their integrity and their reputation. So it's not likely that these guys will mess up your investments. So check the qualifications and the experience. This is extremely important. The qualification and experience of the managers and board members of the fund manager you want to invest in. Also check their corporate governance. I guess this may be a bit complicated for the normal investor. How do you know that the board is well governed? Okay, but at least maybe you could speak to a friend or an investment professional who can tell you that, oh, given the board characteristics of this company, I don't think that they are well managed. Okay, so I know that this point may be a bit beyond the reach of the ordinary investor, but at least you can read something about how the firm is governed or how its board is constructed. Finally, maybe historical performance may give you a clue. So how have their returns been in the past? And like we always say, don't just focus on returns. What has been the risk of their returns as well? Again, in this respect, you may need a professional to advise you because you could calculate the standard deviation of their returns, etc., but that is a bit complicated for the normal or ordinary investor. So check the returns, and also you could get advice as to the kind of risk that the manager is taking. In essence, you can tell that by how its returns deviate from a benchmark. Okay, how its returns differ from a benchmark. So check the returns as well as the risk. Maybe in that direction, there was something that I proposed as market-based solutions. Okay, maybe consulting firms could look at coming out regularly with a ranking for mutual funds in Ghana that takes into consideration their risk-adjusted returns. So not just the return, but also the risks the manager took to achieve what? Those returns. I think that will be very exciting, okay? And that will make it easy for the ordinary investor to check the ranking of a fund that they want to invest in. For fund managers, what should they do? They need to rebuild trust, okay? A lot of trust has been lost. And in the financial space, trust is the most important currency. If you lose trust, everything comes crumbling down. Okay, so trust is the most important currency in the financial space. So fund managers need to rebuild trust. They need to hold their officers to higher levels of accountability and ethical governance. Okay, what I mean by ethical governance is that you don't just do what is legal, but you need to do what is right. Okay, so ethical standards are a bit higher than legal standards. Then fund managers also need to invest on behalf of their clients and invest in the interest of their clients. So they need to reduce agency problems. The decisions they take should be in the interest of what? Their clients. And then as much as possible, they should provide the necessary information that investors would need. In terms of the regulator, I think I'll just skip my slides on that because Paul will say a lot about that. Okay, so as an academic, when I was preparing for this program, I decided to launch a very small survey. I had a number of my students fill it. So at this stage, I think I'd like to acknowledge the MSc Development Finance class, Corporate Governance, Finance, and Investment. They filled the survey. All of them filled the survey for me. And a number of my other students who filled the survey. In all, I had about 222 responses or respondents. So the first question I asked is that, did you lose money during the financial sector cleanup? Majority of them said no. About 36% said yes. Actually, if you lost money, I don't think it's a shame to say that you did. I also lost some money in the cleanup, and I'm still waiting for my refund. Okay, so it's not a shame to say you lost. So about the majority said they didn't anyway. They didn't lose funds. Then again, I asked them, so if you lost funds, will you invest after the cleanup? The news is not so comforting. The majority said they haven't invested after the cleanup. And if they have invested, what convinced them to invest? So a number of responses came out. They want to earn more income because they are knowledgeable in finance and investment. They invested in safe institutions, in their opinion. They believe the financial institution is secured. They want to create an emergency fund. They want to increase their money. They think that there's more confidence in the financial sector after the cleanup. So I think that's very good news for the regulators. Then a number of them said that they did risk-free instruments. For those who have lost money, majority said they haven't received a refund yet. Those who haven't received a refund are not more confident in investing in the financial sector. So refunds per se haven't given investors more confidence to invest. Same thing for those who haven't received a refund, they are not confident in investing. And the last question I asked was that if you have excess funds, where will you invest these funds? I think the responses were quite eye-opening. So number one, 53% of the respondents said they'll do treasury bills. So they are going for safety. I guess because of the turbulence that has occurred in the financial markets. Then treasury bonds, I had 17.5% indicating they'll do treasury bonds. Mutual funds, so good news for the fund managers, 22%. Cryptocurrency, I know the regulator has some concerns about that, but it's 22%. Surprisingly, a lot of people wanted to invest in land, which is a real asset, not a financial security. About 37% wanted to invest in land, and about 28% wanted to invest in buying their own houses. And the stock exchange, not so great news. Only 7.9% of the respondents indicated that they wanted to buy shares on the GSE. So thank you so much for listening to me. At this stage, I'll bring my presentation to an end, and we'll take questions during the Q&A session. Thank you.
Thank you very much, Elikplim. Definitely knows his onions when it comes to finance. Of course, after all the plenty work you've done for the IFC, Elikplim also actually sits as chair of the research committee at Tesah Capital. And in addition to having taught extensively across the continent and in Australia, he does quite a bit of consulting, not just for the IFC, but a number of multinationals and multilateral organizations. So we're grateful for the insights, and please do send your comments or questions via the Facebook link. And if you're on Zoom, please use the Q&A button to send your questions, and we will be happy to field them. I now have the honor and pleasure of welcoming to speak to us our next speaker. He has more than 10 years of financial services experience, with particular reference to commercial investment banking. As an associate director with Standard Chartered Bank, managing international corporate accounts in mining, manufacturing, energy, and transportation. Mr. Paul Ababio did start his career in risk management with JP Morgan, Chase & Co., and later specialized in recapitalization transactions, leverage buyouts, and credit analysis for asset management firms. He has extensive experience in stress testing, portfolio development, and optimization, as well as human resources and negotiation. Mr. Paul Ababio holds a BA in Economics and French from Franklin and Marshall College and an MBA in Financial Instruments and Strategy from New York University's Stern School of Business. Ladies and gentlemen, help me welcome the Deputy Director General of the Securities and Exchange Commission, Mr. Paul Ababio.
Good morning to the workers of Tesah Capital, and good morning to the viewers and listeners across Ghana on this program. We are in interesting times. Fortunately for Ghana, we've crossed a major hurdle in the financial sector. And it's good that we've resolved some of these issues before the COVID crisis came in. But it's also brought up a few issues that we will also look to address. So the Securities and Exchange Commission is empowered under the Securities Industry Act 2016, Act 929. And this act vests the Commission as a primary regulator of the capital market, with the aim of ensuring that there's an orderly growth and development of an efficient, fair, and transparent securities market in which investors and the integrity of the market are protected. Our vision is to be a top-tier securities market regulator in Africa. And our mission, as drawn from the Act, is to regulate, innovate, and promote the growth and development of an efficient, fair, and transparent securities market in which investors and the integrity of the market are protected. We've also developed 4 core values that the public should expect when they deal with the Commission. And these revolve around team spirit, respect, innovation, and commitment. Further details are available on our website, so the public can explore that. So at the end of 2020, we had 2 venture capital funds. So to your point, we actually started licensing venture capital funds. We issued guidelines in 2018 to support the growth of the private equity and venture capital industry. This is found again on our website. It's under the guideline called Private Funds Guidelines. We also had 21 unit trusts, 8 issuing houses, 7 trustees, 2 securities exchanges. People are very familiar with the Ghana Stock Exchange, but there's also another exchange that was actually launched in 2018, which is the Ghana Commodity Exchange. On the commodity exchange, certain commodities are traded, like maize. Now they're introducing cashew, but they also have rice on that exchange. The Ghana Stock Exchange actually has 3 platforms. There's the main board, which everybody knows about. There's the Ghana Alternative Exchange, which is for small and medium enterprises. And that has reduced listing and reporting requirements. So I'm taking this chance to also expand a bit on that. And then there's the Ghana Fixed Income Market, where bonds of both the government of Ghana and private companies are traded. So if you look at it in a sense, we have about 4 securities platforms. So for the SMEs who are looking to raise capital, who only focus on the banking sector, the stock exchange actually offers a platform, and fund managers are looking for investable assets, but they need firms that are willing to disclose information about their business. So the alternative exchange is a viable platform to explore for those looking to raise equity capital. We also have registrars, 4 of them, primary dealers who support the issuance of government securities. There's 12 of those firms. And then 46 mutual funds. And then in terms of fund management companies, we had 86 of these firms. We had 11 investment advisors, 1 exchange-traded fund, which is a gold-linked exchange-traded fund. We have 18 custodians, and then 27 broker-dealers. Now let's talk about SEC's strategy and the Capital Market Master Plan. The Master Plan has 4 main pillars. One is creating diversity of investment products and enhancing liquidity in securities markets. So we've gone through a few areas, but we are still working on some. Private equity is one area that we've looked at diversity. The pillar number 2 is to increase the investor base. That we aim to do through investor education, capacity building, and engagements with the public, like this platform. The third pillar is to strengthen infrastructure and improve market services. I'll talk about digitization at the Commission. I'll also talk later on about the regulatory activities we've undertaken. And the fourth pillar is improving regulation, enforcement, and market confidence. So we talk about the financial sector cleanup that we've done. We've talked about enhancing the regulatory environment and even the resources of the regulator. Because again, we need to have the people to implement the mandate that is assigned to us. As a regulator, we've also broken down from the master plan 3 main strategic priorities. The first is education. So educating the public, educating market operators, and then educating our own employees on some of these initiatives. And then the second is enforcement. If you have rules and you don't enforce it, it can lead to a lack of confidence in the market. And so some of the actions we've taken recently are to show that as a regulator, we will enforce the laws. We will work with other law enforcement agencies to drive through some of the requirements that are embedded in the law and in our guidelines. Then the third pillar is market development. So we have a mandate to support the growth and development of the market. If there are not investable products, if people don't understand how private equity works, how treasury bills work, then we have a challenge. So we are working to develop the market, and you'll see some of that coming out in the products that we also introduce over time. The master plan and the capital markets don't sit on an island. We are tied to the real economy. And so we've mapped the master plan to the various national priorities, which we try to say transcends the political cycle. So for instance, as a country, some of the priorities we have are to increase manufacturing and the agricultural value chain. So we ask ourselves, how do people invest in agriculture? Are there financial instruments through which they can access agriculture short of going to start their own farm? So the GCX is one area we are looking at. We're also looking at the agricultural value chain and how we get players in that sector to come and list on the GACs so that fund managers can find investable agricultural assets to place their monies in. We've talked about one district, one factory. So manufacturing, how are these factories raising capital? Are they relying on debt only? Are they raising equity? Can they get convertible bonds? And who are the investors who will support these things? This will help to create diversity of investment products, which will support the industry. We also have a priority of strengthening institutions and the rule of law. As a country, we have a very stable democracy. Our elections are a bit chaotic, but at the end of the day, for the past, since 1992 or so, we've had stable transitions of power. And so how do we use this to drive our financial sector? And part of it really is achieving gender balance and education. And as a regulator, we find our role in strengthening the rule of law as critical. Another national priority is really technology adoption to enhance business efficiency. And so we've also taken the forefront. Ghana was one of the first markets in the world, actually, to digitize trading. So if you think of our stock market, while people may say activity is a bit reduced, last year we actually had the highest trading volumes on record. In the midst of COVID, trading volumes exceeded by far what has been seen on our markets. In excess of 100 billion cedis of trades were done on the stock exchange last year. And then the last point is enhancing public service delivery. If our private sector is to grow, if our market operators are to derive the benefits they expect from being regulated, then the regulator himself has to have a very professional attitude towards addressing issues, towards delivery of service. And that's an area we also focused on the quality of service that we provide. Along these lines, you can find the mapping onto sustainable development goals, but I'll leave that for your consideration later on. So, Mr. Chair, permit me to talk about some of the reforms that we have implemented between 2017 and 2020. We gave a directive for fund managers to halt guaranteeing of returns. This was because it gives the impression that a fund manager has a balance sheet to support the risk that they take. So irrespective of what happens to the underlying portfolio, the fund manager will make you whole. The fund manager invests in a portfolio of securities whose performance is tied to the nature of the risk those securities entail. So if you pick equity portfolio, you'll get an equity kind of return. If you pick a debt portfolio, which is based on treasury bills, you get a treasury bill kind of portfolio. If you pick a portfolio that is based on bank deposits or savings and loans fixed returns, you get those kinds of returns as well. So that was the first initiative we took. And then we also started investigations into troubled fund management companies. We called hearings. We engaged a consultant to look at their books and to take a deep dive. This brought to our attention the issues that some of them had, which subsequently led to the revocation of their licenses. The revocation has created space for the regulator to focus on the remaining firms and to allocate resources efficiently in supervising the firms that remain, and also to fulfill our mandate of investor confidence and protecting the investors. I will refer to Elikplim's presentation where investors are talking about their funds being lost. In the midst of all this, government took the initiative to intervene and provide a backstop. So we've come up with a bailout scheme where investors who sign up, it is a voluntary scheme, but those who sign up will be able to access their funds. Their funds are not necessarily lost, it's locked up. These firms are going to be liquidated. And following liquidation, the Registrar General will pay a dividend. So whatever assets are left in the firm, that is what they will get out. Those who don't sign up to the scheme will now be exposed to wait for the liquidation proceeds. We also worked on reviewing and enhancing licensing requirements. So that has also been issued. It was issued in the last quarter of last year, and that has new capital requirements. We also did an amendment to the LI 1728, and these provisions were replaced by the licensing and conduct of business guidelines. And then we also did some amendments to specific sections of Act 929, namely Section 35, 37, and 209 of the Act 929. And these allow us to become a signatory to the International Organization of Securities Commissions, which is IOSCO. It's a global body that we are part of as well. We're also preparing a review of Act 929, drawing on the lessons that we have learned from this cleanup exercise, and to clarify some of the powers of the Commission following a revocation action. Another area that we've also worked on is to increase the public profile of the Commission through a series of industry and stakeholder engagements. This allows for greater transparency and greater visibility of what we do as a Commission. The new guidelines we've issued are to strengthen the market, increase product offerings and diversity, and support future growth. We also introduced a new engagement called Time with the Commission. So what have we learned from this cleanup? I think that is one of the areas that I want to focus on. One was that there was corporate governance weaknesses. So along with that, we've introduced a conduct of business guideline in which we require market operators to issue annual reports. So on the issue of governance, how will you know that a firm is in good standing? You can ask them for their annual report, because in their annual report, they'll show you their accounts, they'll show you the kinds of products they offer to investors, and they should also make disclosures on the constitution of the board, whether the board had meetings and how many meetings they have had, whether there's an investment committee duly constituted, and how often it has met. So this also increased the level of transparency that we will see in the market. We also found that there were related party transactions that were not done transparently. So we are working on introducing investment guidelines for fund managers that seeks to address this issue. We've also digitized the submission of reports. This allows for real-time inspections by the regulator and for us to address concentration issues as and when we identify them. We also saw a lack of professionalism and some misconduct. And so this new licensing framework seeks to address that. We are also enhancing the training program that we offer to market operators, as well as implementing a continuous professional development through Ghana Investments and Securities Institute. Then there's the issue of inadequate disclosure to clients who are the asset owners. So we've asked that fund managers improve the mandates that they assign with clients, and that we've also informed the public to ask for statements, get a sense of the position of your portfolio, and to understand the risks in that portfolio. Because as Elikplim said, there are different risks given your investment profile. If you have the appetite, if you've built your land bank, you have your treasury bills, you want to take additional risk, it is okay to take those risks to get excess returns. But you have to understand the nature of the risks you are taking there. And then the other part was investor education. So as a commission, we've also launched a similar series called Time with the Commission. The first one was held in November 2020. We've improved our social media handle. So you can check out our Twitter handle, our YouTube links. We have some of our videos online. And our Facebook page is also very active now. As a regulator, we've also had to take a look at what we do. And key milestones that we've achieved in 2020 includes completing the Capital Market Master Plan that I mentioned. We implemented a Bailout Scheme, which is also to restore investor confidence. So those of you who have gone through this bailout issue, have patience, go through the process. You will get your funds. Some of it is in Tier 1, which will be paid immediately you ask for your redemptions. The rest is in Tier 2, which will be paid on every anniversary of the scheme. We've also obtained liquidation orders on the firms that were revoked. Of the 47 firms that are being liquidated, 34 firms have been granted approval for liquidation and are going through the process. I mentioned the amendments, and I mentioned digitization and time with the commission. We've also hired new people as a regulator. Prior to the action we took, we actually had 62 staff members. We had 5 additional staff, and we replaced 1 more person. So we have a total of 67 full-time staff members. We also implemented AML and CFT guidelines. And then we are working on new guidelines this year. So we have financial resources that are going to come out that will spell out the liquidity requirements and the assets that are supposed to back the capital that fund managers have. We have credit rating agency guidelines. They're in draft now, but we'll be sharing with the public for feedback. And then we're also working on self-regulatory organization guidelines and investment guidelines for fund managers. So what is our outlook for 2020? So first of all, we want to consolidate the asset management industry. We want to ensure that there's compliance, there's adequate risk management, and then board roles are clearly defined and the boards are functioning adequately in their oversight responsibility. We also want to support market development with new products. So we are working on green bonds. We've signed an MOU with the IFC, and we are planning a workshop actually in the month of April. We will send out the invitations to relevant parties for that. We also launched real estate investment trust guidelines in 2019. We haven't received applications yet for that, so we'll be looking out. For those who are not familiar with it, the guidelines are on our website, but we will hold a session to educate the market operators on that. I've mentioned the private equity guidelines, but this year also we're working on an additional incentivized long-term savings scheme that will create additional products for fund managers outside of the pensions regime. Then on institutional capacity, we are looking at a 5-year strategic plan. So for market operators who are listening to us, if you have inputs, you can send us your views on where the Commission should focus on, some of our strengths and weaknesses. We are willing to receive feedback and will engage consultants to help us to develop this plan. We will also focus on capacity development for the market and for the regulator. Then on regulatory reforms, I talked about reviewing Act 929. We want to boost the collective investment schemes. For retail investors, it's a great product because the objectives are spelled out in the beginning, and you know what the prospectus is, and they are required to report regularly on the portfolio. So we'll be encouraging market operators to do that. We'll look at the scheme framework and enhance that as well. We're also looking at the client segmentation of the fund management industry. So we see two broad client categories. There are retail clients and institutional clients. Retail clients also have two categories. We see the regular retail clients who have investable assets of less than 100,000 cedis. For those ones, we require that they only do CIS. Those with in excess of 100,000 can either do the CIS or they can be managed separately, but they have to have a clear investment mandate. And we categorize them as high net worth retail. This is to ensure that the kinds of protection schemes we have are tailored to the various segments of the market and that investors are given adequate information on the kinds of products that they sign up to. On the institutional side, we have the corporates, we have pension trustees, we have endowments, we have investment clubs, and these need to also have clear investment mandates and regular reporting given to them. So after all this, what do we expect to see? We want to have stronger investor confidence in the capital markets. We want to have an improved and diversified investment landscape. We want to have well-informed and educated investing public. And they want to have a commission that is enhanced with adequate institutional capacity to regulate efficiently and strategically. And then for the commission, we also want to have a higher profile internationally. This has implications on the capital markets, on the kinds of investors who will come into our market, on the depth and liquidity that the market will also experience. So I'll end my remarks here with these points, and I think we'll take some questions after this. Thank you for your time. Thank you.
Thank you very much, Paul Ababio, for that. I think we're going to go straight into the Q&A. If you just take a seat, and we will start off with all your comments and questions that have just come through on Facebook, and then we have some that have also come through on Zoom. And please keep them coming. You're listening to Joy 99.7 FM, and this is the maiden edition of the Tesah Investment Dialogue. Tesah Capital is an investment company here in Ghana, and we've been hearing from Elikplim Agbloyor and Mr. Paul Ababio. And we'll be fielding your questions in a moment. There's a few that have come through and a few that's on my own mind. And hopefully our two astute and speakers will be able to help us get through this. Now, the very first question that's come through is this, that is it true, and I think this is clearly a question for you, Paul, is it true that individuals who are yet to receive a claim ID should contact PwC?
Yes. Yes.
Okay.
We have contact details that were shared. I will look them up and share them at the end of this.
At the end of this conversation. Fantastic. Now, in terms of questions, so a lot of the talk clearly demonstrates that the SEC has done quite some extensive work in the cleanup.
I'm not sure I am.
Sorry, that's Siri interrupting. A lot of the work that has been done has really been to show up confidence, but more importantly, to address some of the challenges that led to the situation where people lost monies. What beyond the things you've told us would give me, an average citizen of the land, further conviction that I can go out to invest? Does it mean that the people or the businesses that are around today will be here tomorrow?
Well, I think part of the issue is really understanding the investment landscape.
Okay.
And knowing what the fund manager is doing. Without knowing that, you're not assured of what is going on, and you are relying on assumptions. Now, assumptions are good, but it's also good to understand the basis for those assumptions. Mm-hmm. And the implications if those assumptions don't come to pass. So, for instance, if they are holding a portfolio based on certain products, what are those products, and do you know what they are? And what has been the track record of those products? So part of what we have done really is to ensure that those that remain are given adequate disclosure. And in our view, we cannot give you 100% guarantee. Mm-hmm. What we can say is that if you have adequate information, then you are informed and you know the risks that you take as an investor. Okay. And that is the way forward. Everybody needs to know there are different products. And believe me, even up to now, people are still going for some of the investment scams and the Ponzi schemes in the market. So with all that is happening, you find people still want higher returns. People still want a guarantee that I'm going to get X. That is a challenge for fund managers. And that is something that we've looked at. And we think that educating and disclosing the nature of a portfolio, disclosing the kinds of historical returns. Historical gives people a sense of what you've done in the past and your track record. It does not guarantee the future. And the future is unknown. The future has certain risks, but it allows that if the portfolio is this nature, then going forward, this is the direction, or this is the potential trajectory. And you can tell within a reasonable range what the outcomes can be. And that is the assurance that we give to people, that now when you go to the fund managers, ask questions, ask for disclosure, determine your risk appetite. Do you have low risk appetite? You don't want any losses. And fund managers can actually help you to buy treasury bills. Some of them have mutual funds that invest in T-bills and bonds. Mm-hmm. And for the mutual fund, you can go in and out any day you want. The challenge people often have is that with a fixed deposit, it's for a fixed period of time. Mm-hmm. So if you break it before that, you suffer a penalty. Yeah. With a mutual fund, you can come in and out. You have to give adequate notice, but you can come in and out, and you know what it is, the holdings are. Mm-hmm. So that is an intervention that we think will help to strengthen the market and improve investor confidence.
Okay. I was going to bring in Elikplim, but there's another question which I believe has to, it's quite long. This is someone telling us their own experience. Says, I had about 535,000 CDs under management with Gold Coast Capital Management. And we all know what had happened to Gold Coast after the cleanup. They also boasted of prudent management and still went under and destroyed people like myself's portfolio. I'm currently being told that only 438,000 cities can be validated, even though the SEC has mandated that validation be done to the point of the revocation of the license of the fund management company. The liquidator is telling me that the Gold Coast Financial Management ceased operating my portfolio when they received instruction from the SEC following to offering, okay, now this is technical. What's an SF product?
Structured finance.
Okay, so a structured finance product, and all of these. My question is, how does this boost consumer confidence if someone like me have lost over 250,000 through the mismanagement of my portfolio?
Well, I think this also ties into the disclosure. So what was the structured finance product?
Right.
Someone tells something is structured finance. What does it mean? What have they invested in? What are the underlying assets? And I don't want to comment too much on the Gold Coast issue because we are in court with them as we speak.
Okay.
But the reality is that the portfolio was not performing. We had some of the largest complaints on Gold Coast from 2018. And if you look at the underlying assets, it was a related party transactions they were doing. So
in borrowing from that experience that has just been described, what should a potential investor do going forward to ensure that they're limiting their exposure? Because it seems that both the SEC and the investor were blindsided by the outcome of that investment portfolio.
Well, I think that is where we've also come up with this early alert that when we are doing investigations, we also inform the public that investigations are ongoing. It doesn't mean that we are going to revoke a license. It doesn't mean that the firm cannot fix the issues, but that we are taking some regulatory actions, and that gives people sort of a warning. But then I think from a disclosure perspective, with Gold Coast, there was clearly a lack of disclosure. We had to institute certain actions against them even prior to the revocation. We asked for further clarification. We engaged them. We sought to address the issues. But they were reluctant to cooperate. And so that is why we've put in, if you don't have clear guidelines to say disclose A, B, and C, and the person doesn't disclose it, you cannot enforce something you don't require. You can say that, okay, act in good faith. But what does good faith mean? Right? And that is what we've also, definitely I spent some time on the conduct of business and the licensing requirements. And now we want to have adequate disclosures to investors. And then if they don't comply with that disclosure level, we can also take enforcement actions on the back of that.
Right. Elikplim, in your estimation, is it enough just to invest with a fund manager or any other institution simply because, they are licensed?
Well, not necessarily. Okay, and like I said previously, we may begin to need market solutions to enhance what the regulators do. So are there consultants who are able to rate the quality of disclosures of these fund managers? Are they disclosing what they're supposed to disclose? What is the quality of their corporate governance? I think these are solutions that can complement what the regulator is doing. So having a license doesn't guarantee that the firm will survive. Okay, but I think it's better to invest in a licensed company than an unlicensed company. Okay. And if you do, that puts you in a better position, for example, if the company goes under. Because in that case, for the SEC licensed companies, you are likely to get a refund. But if you invest in an unlicensed company, then you may be in a worse off position. Okay.
I will come back to you for a couple more questions. But before then, I'd like to bring in Professor Abdulatif Al-Hassan. He's an associate professor in development and insurance finance at the Development Finance Center, University of Cape Town Graduate School of Business. And he's joining us via Zoom to make some quick input. Professor Al-Hassan, thank you very much for joining us.
Okay, good afternoon, everyone. Thanks for being part of this insightful session. Yeah.
So, Prof, following the conversation so far, what would you say is one of the key things that either the SEC or the general public, potential investors, ought to be doing going forward? It seems as though in the time of uncertainty, it's the SEC that we all would be looking to. Hearing Mr. Ababio, is there anything else that you feel that the SEC must be doing to restore the confidence of the general investing public?
Okay, thanks once again. I think he may have touched on many of the points that I've jotted down. And I think the most prominent one was education. And looking at the history of collapse of these investment schemes, these Ponzi schemes. I think when I was young, I heard of Piram, maybe early mid-90s. And for me, I think the concern is the reoccurrence of these incidents. So I was happy when he mentioned education. But even though I think they may be doing their bit in terms of education, I think perhaps the dissemination could be greatly enhanced. Mainly for people with finance or business background, I think, as Professor Elikplim highlighted, it's easy for us to make such informed decisions, go about these investment tools, look at their financial return and make informed decisions. But what about people who don't have such appreciation of these issues, especially those from a local language perspective? How are these information disseminated? You have the Information Services Unit of the Ministry of Information, you have GBC and many other local radio stations. What is the extent of engagement at this level to let people know that you invest not there is no guarantee with investment that you're always going to get positive returns. There could be negative returns. And for these Ponzi schemes, I think the emphasis has been on the returns. I'm going to make this math, but they don't stop to think that what if things go wrong? How can you be an economy where you're expecting a 10% return in a month? Yes, which kind of economic activities would be able to support such investment to be able to pay such returns? And perhaps lastly, what we may have also overlooked is not just I think the concentration is the loss to investors, but the loss to the economy as a whole. The decline in the turnaround time of these funds, because some people's businesses' capital are invested in this kind of investment scheme, and when they are not able to retrieve them, these have an effect on the investment of these businesses, and which will translate into the livelihood of a household, and in turn would affect the aggregate investment from small businesses, big businesses, or individuals, and ultimately will cause some form of construction in the economy. So I think for me, I'm happy. I think there are mechanisms in place, but I think there could be more forceful push in trying to educate the public about these incidents, that they should have full knowledge of what is it that they are going into. If you are risk averse, you know the kind of instrument that you are going to mostly go for money market instrument. If you are not risk averse and you're a high risk taker, you know that in taking a high risk, in as much as your returns could be high, your losses could be equally high. So you make such informed decision, having complete knowledge of that. So I think for me, I'm very happy the structures are in place. So from the enforcement perspective, I think it does happen when I read through some of your annual reports, companies which are under investigation, whose licenses have been revoked. These are all short-term plans which help to avoid these kind of busts. But again, those kind of busts, when they do occur, like what happened recently, have far-reaching effect. How do we prevent these occurrences, as has been happening since the 1990s? And I think the regulator is much better placed to push the education agenda.
Wonderful. Well, thank you very much, Professor Abdullah Lateef Al-Hassan, all the way from Cape Town, joining us on Zoom. I'd like to bring in Dr. Frank Amethepe, who is a senior lecturer in property studies, also in the Department of Construction, Economics and Management, also in the University of Cape Town. Dr. Amethepe, In your estimation, the concept of investment, if you would look at our development curve, there's quite a desire to rise into middle class as quickly as possible. How much of an impediment will that put in the way of all the wonderful ideas that Mr. Ababio laid out to ensure that people are not jumping on the next bandwagon that's promising them, 10 times what they invest every day?
Yeah, thanks very much. I think one of the things that Ellie mentioned is the issue of education and the fact that we need to have more data out there for people to make informed choices. Of course, if you are investing in an asset that for the past 5 years, for instance, there's been this issue of gold, right? You need to be able to get data on gold and see what returns gold has been given those who have been investing in it. And I think when I did my analysis, I think from the 80s, gold has never produced more than 15% per quarter. Now, if people understand this, then if somebody comes to tell you that I can give you 10% per month on something, so roughly you want to divide that by the number of months in a quarter. So you should know straight away that this is not going to work. How do people get this data? And I think what Ellie did mention is the fact that we need more, consultants to start to generate more data and make people be in a position to make informed choices. And I think I'm also happy that Doc mentioned that they are trying to expand the range of assets, that people can invest in on our market. And I'm a real estate person, so I believe that there's a huge potential there for us. So I'm quite happy that that is now, being discussed, and hopefully we'll be able to get that out, because it's one of the sectors in our economy that, kind of contributes directly to the productive capacity of our country. So I believe that when people understand the various investments, of course, as we expand the range of assets, then that challenge will even be more. Now we have few assets and people still cannot make up their mind on the rough, estimate of how much they should be, looking forward to get from these few investments. If we have more investment, then that problem is going to be compounded and people can make promises that the masses cannot get to the bottom of, So I think the GSE will have to kind of try to increase the education that people have and, promote the access to information for people and the transparency. If the firms themselves are not under any obligation to give us the data that we need, then it's quite difficult for even consultants or people who are doing independent research to get this kind of data. So yeah, those are my contributions. Thanks very much for the opportunity.
Okay, well, thanks very much. I'm going to come to, Dr. Frank Ametepe. Thank you very much. Dr. Agbloyor, it's evident from the commentary we've had so far that probably, a confirmation of a biblical quote that says, for lack of knowledge, the people perish. Yeah. That we may be in a place where the potential investors might have further apprehension because of the lack of clarity and knowledge. How would you propose that the education, which we've all agreed is important, be done? Because some of it looks, when you start talking finance, some of us, we want to find a carpet and hide under. But it's important because we all desire to create wealth for ourselves and our loved ones. So how do we achieve the education required, considering that we have a pyramid of demographics that maybe towards a broader base might not have the kind of appreciation required to understand these things and undertake them?
Thank you once again for the question. Maybe before I answer your question, I'll pick over from what Frank said. Actually, gold offers very little returns. Okay. In constructing your portfolio, gold is more like a shock absorber, in the sense that usually gold does very well when the market is in turmoil or in crisis. So if you look at what happened 2020 and part of this year during COVID-19, gold prices actually went up because in a crisis, people are running to safety, what we call flight to quality. And gold is one of the assets that is viewed as a safe asset. So in crisis periods, gold gives you good returns, but in normal times, the returns are extremely low. Okay, and it's amazing that somebody can promise extremely high returns based on such an asset class. Okay, so just to add to what Frank said, but more directly to your question, I think education, we all have a role to play. So even at the university, we have, maybe we haven't done enough. So we also have a role to play. Recently, there was an association that was launched in the finance department on financial literacy. So I'm sure the Department of Finance or the business school will be doing a bit more. I think education should also focus on different languages. So financial education, it can be in Twi, it can be in Ga, it can be in Hausa, it can be in Ewe, it can be in
Dangbe, Dagbani, Nzima,
as many languages as possible, so that we can reach as many people as possible. Because the truth of the matter is that even being literate doesn't mean you're financially literate. And those two are different things. I can't say that I know law. When it comes to law, our learned friends will tell you that I'm a layman. When it comes to finance, the fact that you've been to university doesn't mean that you are financially literate. Okay, so we need to do a lot, and I think that the direction should be education in various languages, because a lot of people in Ghana may not be, let me say, especially if you go to the villages and hinterlands, they may not be good English speakers. Okay, so we need to reach them in a language that is natural to them and a language that they understand. So that will be my take for now.
Okay. All right.
Maybe let me come on the education side. We're actually quite conscious of the language issue. Okay. So as a commission, we actually engaged a communication specialist as part of our team, which wasn't the case before.
Right.
So we take it very seriously as part of our mandate. And you'll be seeing some collateral. It takes a while to produce these collaterals, but you'll be seeing some collateral from us in local languages and all that. So that's something that we are aware of.
Okay.
In terms of data, the digitization that we've started to do is the first step. But we're also going to revamp our website to increase access and to have some time series data, because the academics also need some information that they can access easily for research. And once they start to publish, the market operator can pick up some of these ideas. Even the issue of gold, it should be a no-brainer. If you take a grade, we can look at some of these things and say, okay, this is the trend, this is what the market is. Then from there, the person can say, okay, I'm a professional. I'm going to do A, B, and C to achieve a higher than normal return. Then the question becomes, what are you doing to achieve that higher than? And then the discussion becomes a different kind of discussion. So we are keenly aware of that. And I like the point the guy made about real estate.
Yes.
How do you access real estate in this economy, short of buying property and holding it? And it's something that we need to really think about. It's such a big part of our economy. Access to it is difficult. Finance to it is tied up. Even the banks struggle with real estate loans. Right? Because their funding is short term. So you cannot fund a factory, you cannot fund an apartment building when you have 91-day or 182-day deposits. Right. So you need long-term funding to match your long-term assets. And the capital markets is where you find that kind of capital.
Okay. Well, we've had renowned Ghanaian economist Mr. Kwame Pianim join us on Zoom. Mr. Pianim, thank you very much for joining the webinar. And I presume that you would have a word or two for us by way of observation. So if you can hear me, over to you, sir. Do we have Mr. Pianim on there? Okay, so while we work on trying to connect to Mr. Kwame Pianim, a couple of questions that have come through. So what are the modalities of those interested in participating in the commodities market? Are there any particular thresholds that they need to look at? And this is from Paul, who is a farmer in Adaklu, asking, can a farmer from Adaklu participate in that market?
Yes.
Oh, great. We have Mr. Pianim on there. Okay, so Paul, we'll come to you in a second. Mr. Pianim, we can hear you loud and clear.
Thank you very much. First of all, let me congratulate Tesah on this great national service. I think this is something that should have been done 20 years ago, 15 years ago. And congratulations to the presenters for enlightening us. I think that what happened in the past was due partly to lack of jurisdiction. Some of the Ponzi schemes, it was not clear whether it was Bank of Ghana that was supposed to regulate them or the Securities and Exchange Commission. So we should be clear that when institutions are coming up, the regulators quickly get together and decide who should be the regulator. Thirdly, I think education is important, but there's not enough education you can do to the general public. Our friends who are professors in the university, they are financially illiterate, and no amount of information you give to them will enable them take good informed decisions. So we are dependent upon the regulator. And what led to the need to clean up the financial services sector was due largely to the regulators going to sleep and missing their job. We have companies, they have external auditors who audit them and state that they are going concerns, when in fact they are not going concerns. So a lot of the education has to be with the regulators themselves. Are they strong enough to be able to guide the institutions under them? Revoking a license is not the right way to oversee these people. The idea is to be there, guide them when they are going wrong, and guide them in the right direction. And let them know that you are there, you are looking at their accounts. If they are not paying their bills when due, you are going to descend on them. You are not going to be soft on them. And the external auditors who audit these financial institutions and say that they are going concern when they are not, the regulators have to deal with them. And the regulators themselves, I wonder, is there an external auditor who goes through the books of the Securities and Exchange Commission to see whether they are doing the proper inspections of the institutions under them? And then I would like to say to the listeners, the general public, investments are good. When I was young, a lot of household savings were in savings. Later on in the 70s, 80s, they started moving into treasury bills. Now, you'll be surprised to know how many people are investing in equities. And I think the education is that we, the public, must be able to go to sleep knowing that the Securities and Exchange Commission is not asleep, it's not sleeping on the job, but is making sure that those who are advising us to invest are sound men and women of professional competence and of integrity. When I go to a restaurant to eat, I go there not with a health certificate given by those who license them. I know that they are being licensed and I'm not going to be poisoned. So when I go to a fund manager to invest, I should go knowing that the Securities and Exchange Commission is alert. They have all the data. I don't need to have the data. I may not even be able to read the accounts which are published in the papers. But if they have a problem, they should deal with them. And I'm worried about this idea of if you are investigating somebody, you go to the press. It's like being in a theater and shouting fire. You lead to people moving away, and if your investigation leads to a conclusion that nothing was wrong, are you going to be liable and pay for the damage that you've caused? For the young people, I'll tell you from my own experience, you may not have money to invest in a house because that the value says strong. You may not have money to be able to invest in, say, equities, but groups of you, friends, can join together and buy stocks. The good thing about equity is that if you look at the disparity of income we are talking about, in the COVID era, when people were going broke, the billionaires were making more and more money. Where are they invested? In stocks. There are fintechs in Ghana that are coming up. These are the people some of the fund managers should encourage to list and encourage our people to go there and put money. And I call it put away funds. If you are earning 600 cedis, put 60 cedis aside every month and throw it away on equities. Forget about it and let it grow. If you put the same money in life insurance, if it's for yourself, I did that. I put in, and at the end of 10 years, I got the 100,000 I was expecting to get, which then would have been $100,000, enough to buy me a house. Unfortunately, the cedi has depreciated. It was 300 cedis to one instead of 1 cedi to the dollar. So I got 3,000 and not enough to buy a house. So if you invest in life and you are way to get, it doesn't do the same thing. But with stocks, the value also increases, and it's the only place, equities, that can compensate for inflation and for losses such as the cedi depreciating. So I urge all the young people to get involved in equity funding. This is the only way also of creating jobs in the manufacturing and the agro-processing sectors. So I thank Tesah, and I'm sure that your company is going to do very well. Having a lady as a managing director is also a plus, and I hope your board also reflects this gender equity. I know Eugenia, I've worked with her. I can say that I trained her very well. She's a woman of high professionalism and integrity. And these are the people we want in the financial services sector, not people who acquire a license like an armed robber to take our monies and invest in their other companies. So congratulations, and I hope this becomes more of an event. And I like the way Alec started by asking university students whether they invest in equity or whether they lost some money. I think you should have asked them whether their parents or they know relatives who lost some money.
Wonderful. Thank you very much, Mr. Pianim, for those very wise words. And I'm bringing at this point our broadcast of the Tesah Investment Dialogue on radio. We're going to stay on Zoom and on Facebook. We need to make way for the midday news on Joy FM. So do stay with us. Thank you all for tuning in, and enjoy the rest of the programming on radio. But we are still here on Zoom and on Facebook at Tesah Capital, and you should be able to send us your questions and we will take them. Thank you once again to our radio audience. This has been the maiden edition of the Tesah Investment Dialogue, brought to you by Tesah Capital in partnership with your superstation Joy 99.7. So before Mr. Pianim brought us the words of a sage, as he always does, we were about answering a question, Paul, on how or what the modalities were for those interested in participating in the commodities market, if there are any specific thresholds. And for me, this is a really cool question. Can a farmer in Adaklu participate in that market?
Yes, there are various elements to participation. So there are warehouses that are at various locations. Now the commodity that is being brought has to meet certain minimum standards, which are specified by the exchange. So when you bring your products into the exchange, they'll be taken and you'll be given a receipt, a warehouse receipt. And that receipt is what you can actually trade. Right, so it's almost like now you've changed your commodity, your maize, from physical maize you were holding and storing somewhere, which is exposed to potential insects infesting it, mice taking advantage. This is a warehouse that is certified by the Ghana Standards Authority. It's under security. And now you have what you call a financial instrument, a receipt that you can then trade on it. Now there are what we call brokers on the commodity exchange. So once you put it in there and you want to trade it, they have a platform and they have various options. So once he goes to the warehouse, I think he has to check on their website where their warehouses are located. So that's the first level, is the warehouse, sending your goods in there. Then he can also become a member of the exchange. If he's a large aggregator, you can be a member where you pool people's crops, you trade it on the exchange, and you can help to make buyers and sellers meet, right? That's the intermediation part.
Okay.
And so, for instance, some of the large buyers, they actually participate on the exchange quite actively. So that is from the farmer's perspective. One is accessing the warehouse. Two is trading his receipt. And then three is possibly becoming an aggregator, because then he can also help his farmers in his community access the exchange. So that would be, I would say, how he can access the commodity exchange from that perspective.
Okay. Another question. I'm going to field some questions your way, and then we'll bring in Dr. Agbloyor. So this has to do with if you know when the timelines will permit the balance of investments locked up with Gold Coast be paid back to the investors.
Well, I mentioned that Gold Coast is still in court with us as we speak. So they are not, we haven't gotten a liquidation order for them.
Right.
So on that side is the partial bailout that now pertains. And
Was this the one where some people received up to 50,000?
Exactly.
Okay.
Exactly. But once we obtain the liquidation order, depending on the outcomes, then we'll know the way forward on that. What's happening now is that those who are in the full bailout are those who we have liquidation orders for, are those we bring into the full bailout. For those that we don't have for, they will be in the partial until we get that. But I think you raised the question of the accessing the funds. So for the complaints, or for if you haven't gotten your claim ID, you can call our agent on 024-243-9453.
Okay.
I'll repeat it again, 024-243-9453, or gh_fund_manager@pwc.com.
Okay.
So they can reach out there. Now, those who have signed up, after you sign up, you'll get an onboarding notification from the fund manager. That is the amalgamated fund. It is managed by GCB Capital.
Okay.
And so they can be reached on 055-256-4472. So 055-256-4472. And their email is amfund@gcb.com.gh. So I'll repeat again, amfund@gcb.com.gh. So those are the contacts for, one, the onboarding, and then if you have questions on your claim ID and stuff like that, you can reach the PwC contact.
Okay. So, Dr. Boyle, how much money do I need to start investing?
Well, I think it depends on the fund manager you're investing with. But typically, I think it's from 10 CDs, 50 CDs upwards, you can start investing.
Well, I heard Eugenia in her remarks earlier saying that they have a zero balance product.
Okay.
So, I mean, but if you need to start funding that account, you
Yeah.
somewhere from 10
to 50
and what should be the factors I must weigh to determine what kind of investment I go for? Earlier on, Paul mentioned that, you know, if someone was more risk averse or they had a higher risk appetite, you know, then you know, I don't know what a mutual fund is. I don't know what a balanced fund is. I just want to put money away so that, as my grandma would say, "Na awo ma amame." How do I make that happen, and what do I need to
So
factor?
I think, thank you once again for the question. Investor, know thyself.
Okay.
You need to know yourself as an investor. What kind of risk can you take? Some people don't have the stomach to take risk. If they lose money, they may even get a heart attack and die. So you really need to know yourself. And you can do this for a fund manager, though, administer a test. It's called a risk assessment test. That, or even if you go online, I'm sure you can get a risk assessment test that will show you, oh, I'm risk averse. If you are risk averse, it means you don't like risk. Okay. Or I'm risk loving, or I'm risk tolerant. If you are risk tolerant, for lack of a better word, let's go. Okay. So it depends on the investor. First of all, know yourself. Are you able to take risk, or are you not able to take risk? So just to simplify, if you're able to take risk, we say you are risk tolerant, you are risk loving. If you are not able to take risk, we say you are risk averse. So if you are risk averse, you need to invest in instruments that match your risk profile.
Yeah.
Okay, so things like treasury bills, you will get your money. Okay, it's almost, even though theoretically it's possible that the government can default, it's very unlikely that the government of Ghana won't pay the bills that they've issued. Okay, so it's almost, let me say, 99.99% guaranteed that when you invest in treasury instruments, treasury bills, treasury bonds, you'll get your money back. The catch is that, and maybe that doesn't even work in Ghana, the catch is that for instruments that are low risk, they offer low returns. Okay, because we say that risk goes with return. So if it's a low risk instrument, it gives equivalently low returns. Okay, but in Ghana, even treasuries give good returns.
Okay.
Okay, 12% a year is not bad. The bonds, you can get up to 19 points. Even I think that's not at 20%, depending on the tenor. Okay, so T-bills, low risk, you can go for T-bills. If you are high risk or you are risk loving, you can do things like, maybe given the instruments we have in Ghana, things like shares or mutual funds that invest in shares. Okay, and for those ones, the returns are not guaranteed. There are years that you can make negative returns. There are years that you can make really good returns. Okay, but we know from, I don't want to say research in Ghana because I haven't done research in Ghana, but we know from research elsewhere that in the long term or in the long run, the stock market outperforms, let's say, things like T-bills. Okay, so let me give you an example that I usually tell my students. If you had invested $100 in the US stock market in 1928, and they always scream. But if you had done $100 in the US stock market in 1928, today that money is about $500,000.
Wow.
Or if you did $1,000 in 1928, and they asked me about, they were not alive, but I said, but your grandfather could have done that for you. So $1,000 in 1928 in the US stock market today is over $5 million. If you put the same $1,000 in treasury bills, in the US treasury bills, that's about, let me say, $40,000. So there's a clear difference that the riskier instruments offer a higher return, but that's the price of taking risk.
Yeah.
Okay, in some years, like 2007, 2008, 2009, we had the global financial crisis, the market will come down, you lose money. But in the long term, because of averaging, if you do riskier instruments, you get higher returns.
Fantastic stuff. We're wrapping up in a moment. I think I could take a question from, okay, that's Elvis Darko of The Finder. Elvis, you have a question for us.
Yes, I think You talk about confidence in the system. We've seen the banks publishing their annual reports, giving us, after the cleanup, what is happening to their performance. What is the situation with the capital market companies, since you said they are required to provide annual reports? Because that will give investors an idea that after cleanup, something better is happening, that they should put their money there. Secondly, there is this problem that I think if we don't solve, there's nothing that is going to happen, or most people don't have confidence in the system. It's a situation where anybody at all can just go and register a company at the Registrar General, and they open an office and is doing business and say, I am a registered company. And then when it comes to the notice of SEC, they can only tell you that, oh, this company is not registered with us. We only deal with companies that are registered with us. No real action is taken to close them down. In fact, after the cleanup, there have been more capital market companies who are not licensed, who are actually duping people, even before the cleanup. That is what is happening. So if these things are happening, and the ordinary person goes and sees Registrar General certificate, and the companies are ready, puts them, and the money is gone, how do we expect Ghanaians to have confidence in such a system? Until there is a way to say that once it comes to our notice that we know it is not licensed by us, there is a way to close the company down. If that happens, these people will continue to dupe Ghanaians on daily basis. And once that happens, we cannot have confidence in the work that you do. Another thing that I talk about the confidence is in the 2021 budget, we have been told the government is still looking for about 5 billion to settle the institutions, the investors under SEC who were affected by the closure. If, as of today, we are still thinking about where to find money to settle them, why will anybody have confidence that you want to invest in a capital market? Because you need to give me the money, or whatever you have promised to give me, let me have it on time, and then I can say something good is happening. But my money is still locked up, I don't have it, and you are telling me that I should still go ahead and invest in another company, because I think that a lot needs to be done to give people confidence, because what we have now, it's not good. Okay. I don't know what is the level of collaboration or between the financial sector institutions in this country, because it appears there's this problem of blame shifting. If it is, they are not under me. This person is, they are not, they may be doing something that looks like derivatives, but we don't have any law that governs derivatives in Ghana, so it's not under our control. So there is room for people to dupe Ghanaians in the name of investment. And therefore, if this is the situation, it's going to be difficult for us to have confidence that we are going to invest with them. And SEC hardly makes the case, as Doc has made that, look, if the interest rate is beyond this, don't go there. SEC will I think they are just avoiding controversy. And will say, investment is about the risk. The higher the risk, the higher the return, the higher the risk. So you make the choice. But I think that the language needs to change. Like Doc has said clearly, that if anything that is going beyond 20% annually, please avoid it. I think we need to have that kind of language.
The clarity in the language.
From SEC to say that, look, if it is beyond 25%, please, automatically we are telling you that it is not feasible, don't go there.
Okay.
But if the language is, the higher the risk, the higher the return, you are not giving me a concrete information that I'm going to something that I'll lose my money.
Okay.
People also go there.
Wonderful. Paul, what are your thoughts?
No, I think he's raised some valid concerns. I mentioned the new disclosure requirements, and actually for last year, I mean, returns are still coming in, but revenues declined a little bit, but overall assets under management actually went up, 11%. So now it went from 28 billion to about 30 billion, almost 31 billion cedis. So there is some progress on that side, largely driven by the pension funds, but so that's some progress there. In terms of the new companies, I mentioned our staff strength. We are now hiring an investigations person, and we are also building our relationship with the Yoko and the police. And we have shut down some firms. We don't always publicize things. And I think the point was really about investigations. We don't necessarily disclose investigations we are doing. What we put out is if there are regulatory infractions. So it is not a question of we don't know what is going to happen, just to Mr. Pienim's point.
Yeah.
So for infractions, we put that out there. We've also want people to look at companies that are not regulated by SEC. Now, if it's brought to our attention, we also have to understand what they are doing. You can't just go and shut down somebody because there are legal implications. There are economic rights that you also have to make sure are preserved. And you have to document the processes you follow in going there. So we do get complaints from people occasionally. We liaise with Yoko and with CID to take action on some of these firms.
Right.
In terms of funding the bailout, I mentioned in my submission that the bailout is a voluntary scheme. So government only will fund up to those who have signed up. If people have not signed up yet and are not ready to be paid, then there's no need to have borrowed and have the money sitting there.
Okay.
Right, so that is how Minister went back. Because the initial request, if you realize in the 2020 budget, the mid-year review asked for 1.5.
Yeah.
Because that was the level for which we had liquidation orders. Then in the full year, or I think going to 2020, then half year went for 3.5. And then there's the 5.5. So as we get the orders, as we see the pipeline, then we fund it. And that is the idea of government. So then we also preserve, because there are costs to borrowing. Once government borrows to put down,
You got to start paying the
it
interest.
starts counting, exactly. So as we see people sign up, as we see the program move forward, then it is funded accordingly.
Okay.
So that is the background to that. I hope that clarifies it for you. That's where that 5 billion is coming from. But let's leave it at that.
He wants, yeah. He wants your language to be very clear.
Well, I think what we have given, because interest rates also move around, and when I talk to my colleagues in other countries that Ghana's interest rate are in the 20% range, they are in shock, right? Because in other markets, even in Cote d'Ivoire, interest rates are around 10%, 11%. Nigeria, 14% on risky assets. So getting 18, 20% in other economies is fabulous. Getting 30%, 50% is on the scheme of the unknown. Now we're in a market where you found that microfinance firms were giving people almost 37%. Now that is problematic, but that was the rate that was being offered by registered operational businesses. Clearly that has implications on their ability to continue to fund such deposits. But you would not say that the rate they were offering is illegal. And so if somebody has borrowed at 3% and can leverage that return, then you can have a range. So what we come out with is that this is the risk-free rate. And I think in one of our notices, we said in the range of sort of 10% per month. That 6% per month is a bit too high. But we cannot categorically, because you don't know the kind of environment you find yourselves in. And that area, I would say, is subject to debate. Because again, I don't know, those of you who are around, in the year 1999, Treasury bill rates are around 50%, 45% in Ghana. So we also, as a regulator, have to be careful. You look at the environment, you look at the risk premium. If Treasury bills are, I think the 182 days around 14.5%, the 1 year is around 16%. The 5 years is actually around 18%, right? So if someone is giving you, say, 10% above that's a directional movement, but it moves around.
Okay. Well, fair points raised. I'm sure that you'll take this and
we'll take it
look at
into consideration.
Yeah. Maybe outside of being categorical, maybe in the gamut of things that you've put out to help people make a sound decision, some kind of further education on that would be helpful. At this point, we need to be wrapping this up. So I'm going to start with you, since you've been talking for a bit. Your final thoughts as we end this mating investment dialogue.
No, I think it's been good interacting. The points raised have been noted. We will also consider it. I did not mention that as regulators, we also have a regulators forum, which is called the Financial Stability Council. That came into operation at the end of 2018, and 2019 we're in full operation. Last year we met a few times, and it consists of all the financial sector regulators. So that seeks to, I would say, eliminate the arbitrage opportunities and to share information across regulatory platforms, and also to provide some way of improving the regulatory function, because there are interconnected issues that need to be looked at holistically. So that's one thing I want to also leave with us. I want to also thank Tesah Capital for this opportunity. It's good to engage with the public to understand what the issues are, people's concerns on the processes, and to give people information on what we are doing as a commission to help restore investor confidence. I think this has never happened in Ghana's history, such a massive exercise. We've had pockets of change, but this is a historic moment. And I think we're going to come out stronger. A point was made about how can we do this so we don't have this again. Financial crises happen from time to time. The key is to have a risk management mechanism in place, to understand the kinds of exposures that you want to have, and to be prudent, because investments involves active management and making decisions from time to time, given the environment you are in and given the happenings in the environment. So thank you, and we look forward to participating in future sessions of this nature.
Well, we would welcome you any day. Thank you very much. Dr. Agbloyor, your final thoughts.
Okay, so to conclude, I'll say that we all have a role to play from the industry itself, okay? They need to be more accountable, more transparent. They need to be ethical. I think, like I said earlier, the currency in financial markets is trust. Once you lose that trust, it's difficult to restore. Okay, so the industry has a role to play. The regulator has a role to play. I think they are doing a fantastic job. There's more they can do. There's certainly room for improvement. Even academia has a role to play. We need to be a bit more engaged in education. The investor has a role to play. Okay, if you're investing your money, then you should at least read a little bit about what is T-bills, what is shares, what kind of returns can I get, so that you don't put your money where you are going to lose it. So those will be my concluding remarks. And
on behalf of board and management of Tesah Capital, I'd like to say a big thank you to first our audience who have joined us on Zoom, on Facebook, and on radio. We're thankful for your time, and thank you very much, Mr. Paul Ababio, for sharing with us what the SEC has done and answering questions and being candid. I think that was very important. And also Dr. Elikplim Agbloyor, thank you very much for sharing your expertise with us. And I've learned a few new things, and I'm sure that our audience have also taken away some insights that will help them, well, as it were, shore up their confidence in making investment decisions. Until the next dialogue, investment dialogue brought to you by Tesah, I'd like to say thank you. My name is Inshirado, and God bless you all. Be safe.